Hey everyone, in this video we're going to be going over Disney's Q1 2022 earnings report. It just came out. We're going to talk about the individual results across their businesses, go over subscriber numbers, go over revenue and income at the parks, etc., and go over the stock price. Now before we get into the details, if you could smash the like button, it really helps the YouTube algorithm, and if you're not subscribed to the channel, definitely subscribe. Now let's get into it. At the beginning of the earnings release, Disney starts with this paragraph. It says, "We've had a very strong start to the fiscal year with a significant rise in earnings per share, record revenue and operating income at our domestic parks and resorts, the launch of a new franchise with Encanto, and a significant increase in total subscriptions across our streaming portfolio to 196.4 million. This includes 11.8 million Disney Plus subscribers added in the first quarter." This was said by Bob Chapek, the CEO. He goes on to say, "This marks the final year of the Walt Disney Company's first century, and performance like this, coupled with our unmatched collection of assets and platforms, creative capabilities, and unique place in the culture, give me great confidence will continue to define entertainment for the next 100 years." Now let's start with the revenue and operating income for the quarter, and then we'll break down the segments. For Disney's media and entertainment distribution, we had $14.585 billion of revenue. This is up 15% year over year versus in the January 2021 quarter being $12.661 billion. For the Disney Parks Experiences and Products, we were at $7.234 billion. This is up more than double from a year ago at $3.588 billion. And total revenue, combining both of those, is at $21.8 billion for the quarter. This is up 34% year over year versus the $16.2 billion a year ago. Now, when we're looking at the operating income, not just the revenue, Disney's media and entertainment distribution came in at $808 million. This is down 44% from the $1.45 billion, but the Disney Parks Experience and Products came in at $2.45 billion of operating income. This is up infinitely versus the loss a year ago. Overall operating income came in at $3.258 billion. This is up more than double from a year ago at $1.332 billion for the quarter. Now let's break down Disney's media and entertainment distribution, because the revenue is coming from linear networks, direct-to-consumer, content sales, licensing, and other. So these three main pillars, basically, the most important one, in my opinion, is direct-to-consumer. Now that is not going to be the one that is providing the profits today, but I believe it's going to be the thing that provides majority of the profits going forward. Linear networks remained about stable, with $7.7 billion in the quarter in revenue. This is up from $7.693 billion a year ago, so basically flat. Direct-to-consumer hit $4.69 billion in revenue for the last 3 months for the quarter. This is up 34% from $3.5 billion a year ago in the same quarter. Content sales, licensing, and other hit $2.433 billion. This is up 43% from a year ago at $1.7 billion. Now, the operating income for these three categories, linear networks obviously represents currently the majority of profits for this business outside of parks, but in the media part. $1.499, so $1.5 billion of operating income for linear networks. This is actually down 13% from a year ago. The direct-to-consumer business is still operating at a loss because they're investing in much more content, and it plans to be a loss until 2024. That's what management is currently saying, but I think they're sandbagging, and I expect profits to come sooner than that. That said, the direct-to-consumer for the quarter was a loss of $593 million. This is up from the loss of $466 million, and not up in the good way, an actual higher loss. Content sales, licensing, and other had a loss of $98 million versus a operating income profit of $188 million a year ago. As a whole, the operating income came out at $808 million for this segment. This is down 44% versus the $1.45 billion that came in operating income a year ago. Now, the parks do make up for that difference in a big way, but before going into that, let's go over some of the subscription numbers and the DTC business. So Disney Plus, let's start with that. Domestically, in the US and Canada, it hit 42.9 million subscribers. This is up 18% year over year from the 36.3 million subscribers in the US and Canada. This is actually a pretty big number because I don't think they've broken out domestic versus international versus including Hotstar in the international versus not including it. They really broke this down actually a lot more than past reports. So this is a pretty big number, 42.9 million hitting now. Internationally, not including the Hotstar markets, we've hit 41.1 million subscribers. This is up 40% year over year versus the 29.4 million in the international market that does not include Hotstar. So when you add all of Disney Plus subscribers that do not include Hotstar, domestically and internationally, you get 84 million subscribers. That 84 million is up 28% year over year versus 65.7 million a year ago. Then you take the Hotstar, Disney Plus Hotstar subscriber count, which hit 45.9 million in this quarter. This is up 57% year over year. So it has huge growth, up from 29.2 million subscribers a year ago, and that gives you a total count for Disney Plus of 129.8 million subscribers, up from 94.9 million a year ago. 37% total increase in subscriber count year over year. Then we look at ESPN Plus. ESPN Plus is doing amazing right now, going from 12.1 million subscribers a year ago to 21.3 million in this most recent quarter. That is a 76% increase in the subscriber count year over year. And lastly, we have Hulu. Hulu is broken into two segments, SVOD only or live TV plus the SVOD. For SVOD only, it hit 40.9 million subs. This is up from 35.4 million, 16% increase year over year. And for the live TV plus SVOD, it hit 4.3 million subs. This is up from 4 million a year ago, 8% increase. Total Hulu subscribers at 45.3 million versus 39.4 million a year ago, a total increase of 15% year over year. And when you add everything together, I did the math, 196.4 million subscribers total at the end of this quarter. This is up from a total count across all subscriptions of 146.4 million subscribers. So a huge increase in a year's time on the subscriber count across the Disney products. Now, the next most important thing after subscriber count is how much Disney is making per subscriber. This is called ARPU, average revenue per user, on a monthly basis. So Disney Plus, we start with that. Their domestic subscribers are paying $6.68 per subscriber. This is up 15% year over year versus $5.80 on average a year ago. Their international subscribers, not including Hotstar, are paying $5.96 on average a month. This is up from $4.73, which is a 26% increase in ARPU. The Disney Plus as a whole, including domestic and international, averages at $6.33 per subscriber. This is up 18% year over year versus $5.37. Their Hotstar subscribers are averaging just $1.03, so that really lowers the overall subscriber ARPU. But this is up 5% year over year versus the 98 cents a year ago. So Disney Plus as a whole, when you include everything, including the Hotstar users, you get $4.41 of ARPU currently, up from $4.03 a year ago, a 9% increase in average revenue per user. ESPN Plus hit $5.16 of ARPU. This is up 15% year over year versus the $4.48. Hulu SVOD is at $12.96, which is actually a decrease in ARPU from $13.51 a year ago. And the reason the decrease is a lot of people are shifting to the bundle, which actually lowers the price on all services. That said, it was just a 4% decrease in ARPU for SVOD only, which they more than make up for with live TV and SVOD coming at $87.01 per subscriber average revenue. This is up from $75.11, or a 16% increase in ARPU. Now, I've talked about it in past videos, and I'm going to bring it up a little later as well, but I believe that the ARPU will continue to go up for many, many years to come. It is still such a cheap price for the value you get in comparison to what it would cost to have access to all these movies and shows back in the day if you were buying them on iTunes or if you were seeing these movies all in theaters. It's just, or even linear networks just straight up paying for cable TV costs so much more, as you can see with the Hulu Live TV package, than what it costs to have a subscription to regular Hulu or Disney Plus or ESPN Plus. So I believe ARPU will go up significantly year over year for many, many years to come. Now let's go over the parks and experiences revenue, because parks and experiences did fantastic. Domestically, $4.8 billion in revenue at the domestic parks. This is up more than double from a year ago, which was under $1.5 billion. Internationally, $861 million of revenue, up massively, also more than double a year ago's period, which was 378 million, and the consumer products at 1.57 billion. This is down 9% the revenue versus a year ago at 1.7 billion. When you add it all together, you get a revenue for the quarter of $7.2 billion, up more than double from a year ago, which had 3.5 billion in this quarter. The operating income from parks and experiences domestically hit $1.555 billion, up from a loss of $798 million a year ago. Internationally, just barely basically getting a operating income of 21 million, but this is much better than a year ago where there was a loss of 262 million. A lot more improvements still to come as the international parks have less restrictions and can open up more. And the consumer product side, basically flat, 7% down, 874 million of operating income, down from the 941 million a year ago. When you add all of it together, operating income came in at $2.45 billion for the quarter. This is up massively versus a loss and not having any operating income a year ago, a loss of 119 million. So huge operating income. The parks did extremely well. And part of the reason I think the parks did extremely well is something that Chapek mentioned on the earnings call, and he did talk about it in the last quarter as well, which is the per capita spending is going up with things like Genie Plus. So during this earnings call, Chapek mentioned that more than a third of guests at the park are purchasing Genie Plus or Lightning Lane passes. This is a new feature that is adding a lot of cost basically to the consumer when they come in to have a better experience, though. Personally, some people are not happy with this. I think it's a great idea. I think people who are going and want to make the best of it would rather pay a little more to have a better experience at Disney, not wait as long on lines, etc. He also mentioned that during the holidays, this was more than 50% of guests that opted in to pay for Genie Plus or Lightning Lane passes, etc. So a huge take rate, which is amazing for the business at the parks, and I think it's only going to be better as these parks continue to open more and have more international people coming, etc. There's a lot of room for growth there still. So how did the stock perform on these results? Well, the stock is up over 10% today when you include the day plus the after hours movement. The stock was trading around $160 a share in after hours. It has hovered between kind of 157 to 161-ish. And we'll see where it opens tomorrow, and if it can keep this gain go higher, where it stabilizes. But either way, a massive success. The market clearly likes these results, as do I. It was a beat across the board, especially on subscriber numbers, which I think is what the market was looking at most. As far as what I believe the stock is worth, I personally think it's not a stock we can just look at today, look at their fundamentals, and just throw some simple PE on that fundamentals and call it a day. And the reason is because I think this is more of a thesis-driven stock. The streaming business has the ability, in my opinion, to completely flip the margins of Disney. And if I'm right, the streaming business alone has the ability to make the business a multiple of what it's currently. And that's, I'm talking about market cap. It could be more than double, more than triple what it currently is, more than 5 times what it currently is. And I don't want to get into too much detail and go through the entire streaming thesis in this video. So what I recommend is, if you haven't seen my Disney streaming thesis video, please watch it. I'm going to put the link in the description so you can check it out. I highly recommend, if you're a Disney shareholder, watching it and why I'm so bullish on the stock. Thank you for watching. I do have a massive Disney position. I'm thrilled with the results. I'm not going to be selling on this news. I am holding for the long run. If you made it to the end and you haven't liked the video, please like the video. It really helps the channel. And if you haven't subscribed and you like videos like this, definitely subscribe. Until next time.